So I recently logged into Twitter and was surprised to see this tweet highlighting the fact that now Tesla is offering an 84-month financing for individuals looking to buy a Tesla in the US. Now, while this is bullish for Tesla, this is also a recessionary signal, and I want to go ahead and break that down. Now, in the previous video, I've highlighted the fact that the application rate for auto loans has been decreasing since 2022, while simultaneously we've seen the rejection rate for auto loans actually increase to a point where it's surpassing the application rate. And this is happening obviously because ever since 2022, we had the Federal Reserve hike interest rates at the fastest pace it's ever done for a few decades. And so this causes buying a new car almost impossible for a lot of Americans, considering the fact that even if you have a good credit score, your interest rate for a new auto loan is already above 7%. For example, the last time I checked my credit score, I was around an 830, which is considered excellent. However, even with that credit score, I would still be subjected to paying a high interest rate if I were to buy a new vehicle. Now, obviously, seeing that Tesla is doing this and offering this option is very good because we're seeing that Tesla is being very proactive in being able to stir up demand. But this also again shows us that they're having to do this because it looks like things are getting tougher. Now, along with that, we also have a big day in regards to monetary policy, as we had the Federal Open Market Commission deciding on what they're going to do with the interest rate policies. Now, in a previous video, I've highlighted the fact that the market is expecting a 99% chance that the Federal Reserve is going to increase rates by an additional 25 basis points. And so we already had the Federal Reserve hike a tremendous amount starting last year of March in 2022, and we're adding an additional 25 basis points. Now, I've highlighted in previous videos that it takes time for the economy to feel the impacts of these rate hikes, right? And so far, we've only really felt 30% of what the Federal Reserve has already done if we just look at what has been done since last year, right? We still have an additional 75 basis points, an additional 75 basis points, an additional 75 basis points, 50 basis points, etc. You guys understand what I'm saying? And we're seeing a, looming recession kind of come closer to us, but we still have the Federal Reserve hiking, and so that means we're still going to be seeing, demand for auto loans stifle, along with rejection rates for auto loans increase because of a tightening in credit. Now, with that said, this is why I've been saying that, hey, I'm very bullish on Tesla in the long term, but going into 2024 is going to be a bit of a challenge. So I want to go ahead and hop into my laptop and cover a couple of things that we want to pay attention to when it comes to looking into Tesla stock. Alrighty, so we are officially in my laptop and we're taking a look at Tesla stock from a daily time aggregation period. And if we kind of zoom in, we see that Tesla has had 2 consecutive red days, right? Now, of course, if we kind of just parse through the price action and zoom in a bit closer, we see that it wasn't terrible, although we do notice that there has been major selling ever since the announcement of the earnings of Tesla, which happened after the close of the bell on the 19th. In fact, if we go ahead and map it out, we see that Tesla, has closed pretty much down almost about 12.5% since its earnings, right? Now, one of the other things I've mentioned to the Push and Profit private group, but also in previous videos, if you guys are subscribed to the channel, is that we're kind of seeing a little bit of an outflow from the giant mega cap tech stocks and going into the value stocks. So if we take a look at stocks like Meta, we see, a very similar pattern where just like Tesla, for the majority of 2023, it's rallied up. A lot of these big mega cap tech stocks have really done well with the hype play of AI, and of course, fundamentals. But going where we're at now, we're kind of seeing a little bit of a pullback. In fact, we will see something similar with a stock like Netflix as well. And if we take a look at a whole bunch of different sectors, we see that education is doing well. If we take a look at water and utilities, we're seeing that those markets are doing well. Healthcare equipment's doing extremely well. Electricity utility companies, we'll see Duke Energy over here doing fairly well. Oil and gas pretty much is doing well. Pharmaceuticals, I mean, the list goes on. We're seeing a lot of other sectors seeing a inflow of capital, right? So think, the Dow Jones, right? A lot of industrial companies. But again, when we look into these mega cap tech stocks like Tesla, we're kind of seeing this rejection. Now, Something else I mentioned with Tesla is that, when we're taking a look at the technical aspect of Tesla, we're also seeing that it's kind of getting rejected from this descending trend line over here, where we see it getting rejected quite a few times in the past. Now, I don't put too much weight on technical analysis, although it is one data point. It's not the strongest one, but it is a data point nonetheless. And so we like to pay attention to what's going on in the charts, and it's clear that we're seeing some sort of rejection over here. Now, does this mean that Tesla can't break above this, in any day? No, absolutely not. Stocks are not supposed to adhere to whatever squiggly lines you draw on the map. The point of kind of just drawing your trend lines and mapping things out on the chart is to really just measure and kind of just depict where we're currently at, right? It's not something that tells you the future. It's just kind of showing us what's currently going on, right? And so one of the things I've mentioned to the, Push and Profit private group as well is that, I'm very bullish on Tesla in the long term, right? I'm talking about 2025, 2030, right? Bullish for Tesla in the long term. Why? Well, I still believe that they have such a strong lead in the EV marketplace. And even though we're having more legacy automakers join the EV space, Tesla still holds the dominant market share. And we see that Tesla has been able to, stay or be much more profitable, alongside a lot of its competitors, right? And I talked about Wright's law, where, the more you produce something, the more efficient you become. And because Tesla is at scale, right, in comparison to all the other legacy automakers when it comes to manufacturing EVs, they're going to be experiencing even more, of an impact on price reduction when it comes to manufacturing of their vehicles. And then along with the Cybertruck, being that it's a very unique design with the castings, which, Tesla has said from their engineering department that it's going to be cheaper to repair, we're most likely going to see Tesla still ahead of the lead. But one of the things we have to understand is that we're in a secular bear market. Yeah, we've had some cyclical bull rallies, but we still have to understand that we're in a bear market, right? For example, Tesla, has been still trending downwards. If we look at it, I know it's hard to see that because we rallied so hard, but we, have to remember that even in bear markets, we see massive rallies. In fact, we see sometimes more rallies in bear markets than we do in bull markets. And I know this is something that rips the faces off of bears sometimes, because if you're shorting, these rallies could rip your face apart. Imagine, when Tesla was falling down towards the beginning of 2022, and then we have this rally where we basically just go vertical, and then right afterwards getting rejected and falling down, and then again, rallying up, consolidating, falling down a tremendous amount again, and then having another rip your face off rally take place. It's very difficult, and that's what makes bear markets challenging, although there's tons of opportunities in a bear market. For example, this is a great time to build wealth if you're someone who's investing in the long term. Warren Buffett has, often said that when it comes to shopping in the grocery store, individuals are, welcoming discounts and buying more and purchasing more when there's discounts on groceries. But the psychology when it comes to stocks gets thrown out the window. Individuals get scared out the market when, these are the times where you want to go ahead and buy more so that you could go ahead and start building wealth. Wealth is really built during the bear markets. I mean, I'm going to go ahead and kind of, go on a little tangent here, but think about the individuals who bought houses after the crash of '08, right? We saw, prices in houses throughout the nation were all at all-time highs in 2006, but then as we got closer to 2008 and 2009, we saw prices capitulate, right? But the individuals who were able to, hold steady and buy properties during that time period, they're sitting on a ton of equity, right? And so it's, very similar to the stock market. If we continue going down, well, these are the times to go ahead and add in, right? Of course, you should always do your due diligence. You shouldn't invest or trade based on anyone else's opinion, and only buy something or trade something if you see value in it, right? And so I see value on Tesla for the long term, based on the fundamentals. Even though we're in this, bear cyclical market, I just think this is just a great opportunity to build wealth with Tesla. Now, for someone who's trading, a bear market does provide a lot of opportunity, right? Just as much as a bull market, right? It's just a little bit more challenging, and you're going to have to be a little bit more agile, right? For example, if we kind of just look into 2020, right? Let's go ahead and kind of zoom in over here. Of course, we had the whole, pandemic stuff happen over here, but then we had a lot of free money come in. We had the faucets open, and what do I mean by that? We had the Federal Reserve lower interest rates to historic lows, and then we also saw a flush of capital into just just consumer pockets. And so, this is a very easy market where all things go up, right? And so it's great to make money during that time, but it's also a great time during bear markets. It's just that you have to be a little bit more agile and understand that, hey, there's going to be times where things are going up and there's going to be times where things are going down. And, that's something that is a little bit more difficult, but nonetheless, opportunity is going to be presented. Now, if you're someone who's trading Tesla in the short term, this might provide a great opportunity to short as well. Now, if we're looking at Tesla from a technical aspect, one of the things I want to highlight is that if we look at the market profile, or I'm sorry, the volume profile, I do want to provide a little bit of a correction. I meant to say volume profile right over here towards the right. We see that we're at an area where, there's very little volume by price. And when there's very little volume by price, that's where we see the biggest movements for a stock. I mean, if you take a look at where there's areas where there's lots of volume by price, right? That's where we see the consolidation for, Tesla, right? Where there's lots of volume by price. Why? Well, because there's lots of volume. What is volume? Well, we're seeing the exchange of buying and selling. And so when there's a lot of buying and selling, a lot of people, filling up the bid and the ask, it's not going to move the order books drastically, right? But when you have a lot of buying pressure or selling pressure in an area where there's little volume to price, well, we're going to see the order books move, in a drastic movement. For example, if there's a lot of selling and there's little volume by price, we're going to see a lot of, of the price action fall down. Of course, as we get closer to that area where there's a lot of volume, that's where we see kind of sideways movement. But once you break below that, right? Once we broke below that, we saw Tesla kind of fall down rapidly and then shoot up rapidly. Why? Because there's very little volume to price. And so we're still at this area where there's very little volume by price. And so if we see a lot of selling, well, we're going to see these big candles. That's where we see the big candles when there's, again, little volume by price. However, I want to go ahead and watch Tesla and see if we get close to this, low $200 area, right? It's not guaranteed that we're going to fall down to this area. And, I want to make that clear that just because, there's a lot of volume over here and there's low volume, it doesn't mean that Tesla absolutely has to fall down. We still have to monitor Tesla and see, what goes on and stay data dependent. But most likely, if there's little volume by price and we continue seeing selling pressure, well, we're going to probably see Tesla continue going down until we see this low $200 area where there's a lot of volume by price, where we start to see, kind of a battle between buyers and sellers, and we'll see consolidation. And that's when we want to see, hey, is Tesla going to break below that? Or is Tesla going to bounce above it? Of course, if Tesla bounces from there, well, that's just confirmation that we're moving upwards again, and that's when you may want to add more into your long-term portfolio. Or if you're simply just trading Tesla from a short-term duration, well, then you may want to, buy some shares or buy some calls when you're bouncing up from there. Of course, as we're falling down, that's where you're going to want to short, and if we break below it, again, that's another opportunity where you're going to want to short. So, there's a couple of things that we want to pay attention to. Of course, one of the things I mentioned earlier in the beginning of this video is a change in monetary policy. So we know that, the Federal Reserve is going to make their decision on what they're going to do with monetary policy next week. Now, I showed you guys that 99% of the market is anticipating that they're going to hike an additional 25 basis points. So if they do, yeah, it's going to seem bearish, but it's not going to be as bearish because the overall market is already pricing that in. They're already expecting that. It's when the unexpected happens where we see the market kind of, frantically move because, it's something that wasn't expected. And so if we actually see the Federal Reserve hike by more than 25 basis points, well, that's going to be really bearish, right? If they hike by 50 basis points, that's not going to be good. But if we look at the bull scenario, if the Federal Reserve pauses, well, that's going to be really bullish, right? And so, we have to stay data dependent. We can't just kind of make predictions. We only want to really pay attention and see what's going on with the overall markets, because you have to really keep your pulse on it to really understand where things are headed, right? Now, with that said, I hope you guys enjoyed, my overarching view on Tesla. I covered it from the long term. I talked about some things I'm looking into in the short term. Let me know in the comment section below what you guys are planning to do with Tesla, both in the short term and in the long term. And with that said, guys, hopefully you enjoyed this video. Make sure to like and subscribe, and also watch this next video right over here. And I'll see you guys on that next video. Take care, guys.